Hello guys, today we're gonna do a question based on the topic fixed and tangible assets. So we are gonna do activity 1 as we continue with other videos. So on activity 1 we have our required. It says prepare the following ledger accounts: vehicle ledger account, accumulated depreciation on vehicle, and asset disposal ledger account. So on our activity, we have been given a trial balance on 28 February 2019 at the end of the financial year, which ends on 28 February 2019. We've been given a vehicle with 100,000. We've been given accumulated depreciation on vehicle at the beginning of the year at 27,000, and we got 3 adjustments. So adjustment number 1, they said they bought a new vehicle on the 1 August 2018 for 32,000 and paid by check. Adjustment number 2, they said on 1 December 2018 they sold one of their old vehicles for 40,000. Its original cost was 51,000 and its accumulated depreciation was 23,000. Depreciation is calculated at 15% on straight line method. So I advise you to just pause the video and try to attempt this question on your own, and after you'll get the solution. So let's commence with the solution. So I've drawn my ledger account, vehicle ledger account, accumulated depreciation ledger account, and also asset disposal ledger account. As we start, we're gonna, when you're writing accounting, you must record the free marks which you got first. We are given the balance of the vehicle at the end of the year. On 28 February trial balance, it means at the end of the year the balance of this amount. So we're gonna just record this. So it will be on the credit side, it will be balance brought down. So we're gonna record our balance at the end of the year of 100,000. So after, we are given accumulated depreciation on vehicle at the beginning of the year. It means at the beginning of the year on the credit side, an accumulated depreciation is credit balance of 27,000. From there, they said transaction 1. They said they bought a new vehicle on the 1 August 2018 and paid by check. It means we are going to the vehicle ledger account. Please don't forget you will have an opening balance here, balance brought down. So we don't have currently, but they said they purchased a vehicle for cash. It means you're gonna say bank. Please, it's not, you must not write additions. The contra account is bank because they paid for cash. It will be 32,000. Okay, from there, another important part, please, we said when you'll be busy preparing attempting this question, please don't forget timeline is a very important tool. Please draw your timeline. As we draw our timeline, we got 28 February 2019 is the end of the financial year. It means our year commenced on 1 March 2018. So when you are reading your transactions, please make sure if you see a date, you must record it inside the timeline, because you will be preparing to calculate the depreciation. So we got date there. They said they purchased a new asset on date 1 August 2018. Okay, so it means we've already recorded the amount, bank, and also they said the following transaction. They said on 1 December 2018. Please, on your timeline, just write 1 December. Can we say new? And also sold. On 1 December, they sold an asset. So 2018, they sold an asset. So it means you just write just allocate your dates or write your dates on a timeline before and after. Record in your ledger account, record what you have been given. Just like now, they said they sold one of their old vehicles for 40,000. It means they've sold this vehicle for cash. For how much? 40,000. It means that 40,000, it belongs where? Inside your asset disposal. Is you're gonna say bank. After how much? 40,000. Is it for 40,000? And they said its original cost was 51,000. It means the original cost of this asset is 51,000. It means on the credit side, because a vehicle is an asset, so increases on the debit side, it decreases on the credit. So when you are disposing an asset, it means your vehicles are decreasing. So it means on the credit side, you're gonna say what? Asset disposal. After 51,000. So it means you can apply the double entry system by just inside the asset disposal ledger account. You're gonna say transfer the same amount to the ledger account. You're gonna say vehicle. You'll be applying the double entry system vehicle, and also the cost is 51,000. From here, you continue. They said its accumulated depreciation was 23,000. It means the accumulated depreciation of this asset had already depreciated for 23,000 when at the beginning of the financial. It means now you're gonna go to the accumulated depreciation ledger account on the debit side. It means you're gonna say asset disposal. You already have how much? 23,000 as opening accumulated depreciation of this sold asset at the beginning of the year. So you are still gonna calculate what? Depreciation for the current year of the sold asset. So now let's go to calculate our depreciation. Please, before calculating depreciation, please make sure that you count how many months did this asset spend inside the business. There's a new asset, and also the sold asset, and also the old assets which have been there in the business from the beginning of the year until the end of the year. So let's start. I'm gonna use different colors here so that you can see. Okay, let's start with the new one. The new asset has been purchased on date 1 August 2018. Please make sure dates are very important. Please, a month. When we are talking about a month in accounting, we are talking about a month starts or commences on 1 until 31. It means at the beginning of the month it will be on 1, and also at the end of the month will be on date 1. Please, if they can purchase an asset on 1 at the beginning of the month, it means that asset will be there. It will be inside the business for that month. It means you can count that month. But if they purchase an asset at the end of the month, it means that asset was not there during that month. It means it will only operate its production when after the date 1. It means in the following month. So you must start counting the following month. Just like now we've been given date 1 August. It means at the end of August they purchased an asset, the new asset. So it means when we are counting, we're gonna say this asset has been there inside the business from date 1 August until 28 February 2018 at the end of the financial year. So when we are counting, you must not count August because it's at the end of the month. You're gonna start by counting September, October, November, December, January, February. It means it's 6 months. This asset has been inside the business from September until 28 February. It means it's 6 months, only for 6 months. So please make sure you note your dates very well, because the examiner will just trigger you on dates. Please make sure you understand the dates very well. So after, let's count how many months did this sold asset spend inside the business. Our sold asset has been inside the business from 1 March 2018 until 1 December 2018. 18. That means they sold it at the beginning of the month. It means we cannot count December because the asset has not been there for the whole month of December. It means they have disposed this asset at the beginning of the month. So it means we're gonna count March, April, May, June, July, August, September, October, November. Please don't count December because it's at the beginning of the month. It means this asset has spent 9 months inside the business. Please, 9 months. And please, I beg you, use your fingers to count this month. So after we are having another. So with the lemon color, we are having asset which has been inside the business from the beginning of the year until the end of the year. It means for how many months? 12 months. It means the sold one has been inside the business for 9 months, the new one 6 months, the old ones 6 months. So we're gonna calculate, please. We are calculating depreciations for 3. We have 3 calculations for depreciation. We're gonna calculate depreciation for the new one, the sold one, and also the old one. So let's start. Number 1, we are calculating depreciation for the old asset. So okay, let's start with the new. Let's start with the new new asset. So the new asset, we are using what? Straight line method. So it means when you are calculating the straight line method, can I start depreciation? When calculating straight line method, when using straight line method, you're just gonna say cost multiplied by depreciation rate in percentages multiplied by x over 12. What is x? The number of month which the asset has been inside the business. So it means now when you are calculating for the new asset, you're gonna say cost of how much? They said they purchased this asset for 32,000. It means you're gonna say 32,000 multiplied by depreciation rate of how much? We are given 15%. You're gonna say 15% multiplied by x. How much is x? We are talking about the new one. The new one has been inside the business from 31 August 2018 until 28 February. It means for 6 months. It means 6 over 12. So after calculating, I got 2,400 as my depreciation. And also now we can calculate depreciation for the sold asset. Number 2, sold asset. So the sold asset, they said, can you check? It was sold for 40,000. This is not the cost. It's just the money which they will receive after its original cost was 51,000. It means there's depreciation. Its original cost, when you are applying historical cost, it's 51,000. It means it's the cost of this asset. So it means you're gonna say 51,000 multiplied by is the cost. Yes, it's the cost. Depreciation rate is 15% multiplied by what is x? Our x is the sold one. Our x is 9 divided by 12. So after calculating, I got 5,738 as my depreciation for the sold. I have rounded off because on the calculator it was 0.5, so we round off. Okay, from there, number 3, we're gonna calculate depreciation for the old, or sometimes called the remaining assets. It means asset which has been inside the business from the beginning of the year until the end of the year. So please note this. When you'll be calculating depreciation for the old asset, you must always draw this picture. Please, let's draw this picture. We had vehicles at the beginning of the year. Let's say, for example, we have 3 vehicles at the beginning of the year. So it means I'm saying at the beginning of the year. So during the year, they sold one of the asset. Can I cross it? They sold one of the asset which it was inside the business from the beginning of the year. And also they purchased a new asset. It means at the end of the year, when you'll be opening the garage maybe of the asset, you'll find this asset. 2 assets which were in the business from the beginning of the year, but there's a new one which is being included inside the cost of this asset. So it means, please make sure when you'll be calculating depreciation for the sold asset, please note this. You have to make sure that you draw this picture and be able to can understand which when you are having the cost in and you interpret that inside this cost, this is cost of this asset and or this asset. So let's do it practical. On our example, we have been given vehicles for 100,000 at the end of the year. It means the cost of the vehicles at the end of the year was 100,000. So it means we have how much? 100,000. Inside this 100,000, it means this balance they've given us balance when at the end of the year. It means at the end of the financial year we have how much? 100,000. And when you'll be opening the garage, you have what? The two vehicles which belongs to from the beginning of the year, and now you have the new assets. So please note this. This is very important. Please, it means inside this 100,000 they have included, because everything when after purchasing that asset they have already recorded the asset. If they cannot state on your question that they have not recorded the if they cannot say this transaction has not been recorded, it means automatically they have recorded that asset. So because you have been given what? A trial balance at the end of the year. So please note this. note this. Now inside this 100,000 there's a cost of the asset which is the new asset. So it means this cost of how much? Of 32,000 it has been included where inside this cost. It means you have to subtract 32,000 inside this cost. It means your new balance. So the balances of the assets or vehicles which have been inside the business for 12 months is 68,000. So it means when you'll be calculating now, depreciation will have the cost of 68,000 multiplied by 15% multiplied by 12 over 12, which is equals to 15% multiplied by 12 over 12, 10,200. So I will make another video where I will be explaining this content, because of we have an unlimited time here. So I will explain how to calculate depreciation of the old assets. So because you must make sure that you understand this very well. Just repeat this question maybe or this video, this part, you will understand it very well. So after getting my depreciation, so I got depreciation, the first depreciation of the new one, and depreciation, another depreciation, also the depreciation. So let's go inside the accumulated depreciation T account. You'll be having what? Depreciation. So here is the depreciation for the year. It means this amount, the total amount here, will go inside your income statement and also inside your note number 3. So let's start. We have 2,400 first depreciation of the new one, and also sold one 5,308 plus the old ones will be 10,200. Okay. And also the sold asset, we must calculate, we must add another amount, depreciation for the year, because at the beginning it had depreciation for this amount, so you have to add this amount, the depreciation for the year for the sold asset, which is 57,300. So I think we are done with our question. So please